that, hello there, magic voice. I was just going over the high scores for the How the Market Works competition, and we have a number of people that have gotten up to 38% return on their money. But it's also worth noting that over 90% of you all made money in this crazy market. Now, there is investing smart, and then there is investing securely. This has not been a secure market. There has been no promise that you're going to make money, and everybody has faced challenges when it comes to evaluating stocks and figuring out what stocks you want to invest in. So I just want to congratulate you all for learning in a very tough environment how to invest and making the most of the opportunity. And again, 90% of you all have made money despite everything that's been going on. So I applaud all of you guys for your successes. And I hope that even in your mistakes, that you've still learned something along the way. I think that there's more to be learned from the mistakes than anything else. So thank you all for being a part. And we have Carlos, who is our first place participant with over an $8,000 lead over second place. So wow. Carlos, are you there?
Maybe.
Carlos.
Hello, can you hear me?
Hi, how are you?
Hi, Carlos.
Hi, Julie. Hi, Jonathan, Kira.
How are you doing?
Oh my gosh, what a pleasure.
Good.
So I just really wanted to, first off, congratulations on the competition. Yes. You have gone above and beyond and have made an absolutely incredible amount of money in 3 months. So congratulations for that. I wanted to ask, so how did you find the stocks that you wanted to invest in? Because to get that much profit, you need to find big winners. You can't just throw your money everywhere and hope that it just a rising tide floats all boats. So what was your strategy for finding your big winners?
Well, at the beginning, I started following the instructions that you guys, that we learned with you guys. Can you hear me?
Yes, we can.
Yes.
Okay.
Yes, we can.
And later, when the market was a little bit choppy, I took some that, like Julie says, I was a little more echapalante, and I did kind of risk. I risked a lot going onto the airlines and the cruises.
Oh my gosh.
Yes, like half of the portfolio that I had, the money that I started with, it was in those two sectors. And thankfully, I got out on time, and that's what thrust me to the top, because I kind of started late.
Right.
So
wow.
So it feels good. It feels good.
So I'm curious, what were your big winners from the competition? What made you oodles and oodles of money?
Let's see. I have to look at my account. Hold on. Mm-hmm. I hold one of the good ones, like SQ, PayPal, Zoom. The biggest one was DocuSign. That was the biggest one. And then
even today, did you see what it did today?
Yes.
Even when the market was down, it went up like 5%.
Sadly, I don't have that in my real account. So
it's DocuSign, Lucia. I think it is DocuSign.
DocuSign. Yeah, and then some of the risky ones that I do have, there are on red. They went down a lot today, like hotels, because I'm holding the MGM, and some MGM and some other one that I found. It's called Erie El Dorado Resort, which is ERI, and those pretty much are the ones that help me out to raise that much money. And I really don't believe it. Like, in 3 months, it's a lot of money. If it were to be real.
Did you invest before?
No, I actually started trading like 3 months ago when I joined you.
What do you think about it now?
I was missing out. Like I said, I was missing out a lot. Julie, for the past probably 2 years, I heard your name. but never follow you into the last 2 months, 3 months that COVID happened and we have to stay at home. So thanks to that, I got into trading.
Wow.
And I'm really happy to be part of this group too. And also,
Can I
thank you.
interview you during the radio show
Yes.
in Spanish?
Claro que sí.
Okay, so will you send me an okay and your phone number so I can call you maybe next Thursday?
Okay.
Because I think people need to hear that this is possible.
Okay.
Thank you.
Thank you. Thank you for all the work that you do, Julie.
Well, you know,
You guys,
you
in
make
general,
it
thank
you
you.
make
Thank
it
you,
so
you
much
guys.
worth it, because to see someone that has come such a long way, and I know that you all have come a long way in one way or another. It's not all measured in dollars and cents, but I think we can all say that we are better for this experience and for having had this time together. And I'm just so filled with gratitude for all of you. Thank you. Thank you. And it isn't just about money, but I hope that we gave you a push, that we gave you, we shared some of our energy so you know that there are people out here that believe in you and believe in ourselves, and we need to continue that.
And thank you for listening to what we have to say. It's very easy to sit here or to do for any class to just sit there, listen to the information, but never apply it. There's a huge gap between just listening and understanding information and then taking that information, making it yours, and then using it to do something. So what you have done is not just listen to our teachings, it's been understanding it and making the strategy your own. And that's something that I find really awesome about your trading strategy is it hasn't just been DocuSign or Beyond Meat or the stocks that we've talked about. You've gone and you found your own diamonds in the rough and really made a lot of money off of those. Like one of your bigger successes, I believe, was the El Dorado Resorts. I'm curious, how did you find some of those other stocks that we never really talk about but resulted in large profits? So for example, El Dorado is the big one.
Yeah, well, through that, first of all, I want to give credit to my girlfriend, my fiance, Adriana Gonzalez. She's number 2. So for 2 years, she told me about Julie's stuff in the radio and in the shows, and I never listened. So like a repeat, like into the last 3 months.
You boys are slower, okay? We have to wait for you.
That I wasn't doing much. I started following her, Adriana, and then I started joining the meetings, and I have to play catch up, and that's how we're doing it. How did I find El Dorado? Well, those were one of the ones. I found that stock through Adriana, basically. Back then was like around $10, and then 12 and 13. So I saw how it was moving over time, and I just took the big jump and risk because it was fake money.
Can I interview her too? Can she be with you when we have the interview?
I think so, yeah. I mean,
I
we
would
have to
love
ask her.
that. Okay, all right. If she's okay with it, have her send me an email because I would love to have both of you. I think that's really going to help a lot. As a matter of fact, wow. I just have a crazy idea. Monday, I have just been contacted by the Erasmo y Chocolata people. You know who they are?
Yes.
The radio show. Well, they want to have me on at 2:00, and the whole subject is how you can improve your finance with your couple, with your partner. And I think the two of you would be great. Can I give them your numbers?
Yes, definitely.
Okay. All right. You guys share your stuff with me. Let me make some noise. Let you go out there and have your platform because you deserve it. And we have to be not like the crabs that when one tries to get out, the other ones pull it in. We have to push each other out. And realize that your success is all of our successes. Your story can be a little boy's story that just hears you and says, wow, I want to be like him. So I thank you and Adriana for being such incredible role models. How old are you, Carlos?
I'm 41. I'm
That
41.
is so great. You know what? I was 43 when I started investing.
And for the longest, I refused to go in the market. That
What do
was
you
just
know?
saving. That's it.
It's not enough, is it?
No.
What do
Now
you
you've
think
put,
has been the biggest lesson you've learned here? What was the biggest aha moment that you've had during this whole experience?
Well, I think when you hold the cash, or you hold the money, it doesn't grow. And when you invest it, it has the potential to become more. I don't know if that answered that question.
Absolutely. Has this changed your relationship with Adriana in any way, the way the two of you communicate or the way that, you know, what you talk about? Has it influenced that at all?
Well, yeah, because when I wasn't working, thankfully I'm back at work. When I wasn't working, I was up at 6 in the morning just to see the market. So I kind of saw how things were moving, and I put a lot of hours
Mhm.
just like following the market. And like you said, that helped. Yeah, we'll wake up every morning. Quick text, especially when the accounts were so high on blue, on green or red. Yeah, but we're happy to be a part of your team.
Well, we're all part of your team now, okay? We're part of each other's team. And this is what I want to emphasize, that maybe the spotlight right now is on me or on Jonathan or Kira or Vero Guevara, or, you know, but that I want it to be on each one of you because you deserve it and you all have a story to tell. And I want it to be heard loud and clear. That's how we show that we are together in showing, you know, this is what we're making happen. This is how it can happen, and opening more doors for the people that come behind us. So I thank you. I'm in awe, and I feel kind of starstruck in talking to you, and because you did it. You did it.
Thank you for all the work that you do. We really thank you. Quick request. Well, I have a question and then I have a request. I have the request first.
Okay.
Can we put Adriana through the screen?
Yes, I would love that.
We're not in the same place, so we haven't seen each other today.
Okay, Kira, you're the one that can do all that magic. It was you. I asked you, are you the Adriana? And I thought you said no. Okay, I can't hear you. Oh my gosh, look at you, mujeraza.
Yes, it's Adri05, but I've never used Adriana Gonzalez. So for some reason, I didn't want to expose myself.
Well, it's too late now, honey. You're gonna be famous. So this is awesome. Awesome. What do you think about all this?
I'm very fortunate to be able to share this experience with my fiance, because for a long time I told him, hey, look, I believe in her. I believe in her work. It works. I've tried it. This is something that can help you, maybe us in the future, you know, for kids. And I told them, look, they're teaching kids, which means that we can learn in a more basic way and a more understanding way, I guess, for everyone. It's been a great experience. I have not slept a lot because I'm working from home, and it gives me time to actually focus on the stock market, your courses. It's a lot of dedication, but it's fun. My anxiety went up, which is fine. It has a rewarding side to that, which is more games. And so, yeah.
Wow. Did you invest your money besides the competition? Did you open an account?
I did. I opened an account through TD Ameritrade. I started with a certain amount. I'm like, no, I need to push it up. I can do more, and then more, and then more. And I'm like, okay, I have to like hold my horses a little bit. So I did open a TD Ameritrade account. I bought drips. I bought 3M and Exxon. Exxon has gone down, but I have not.
I have Exxon, I know.
And at first, it was a bit frustrating because I would buy a large amount of Disney stocks and then it would go down again and then it would sell off due to the 10% trailing stop. And then I heard others say, well, I'm going to push it up to 15% because the market right now is pretty volatile.
Mm-hmm.
So everything that you mentioned through your courses, I wrote it down. I have my own rules, like you mentioned.
Good.
Wait until you start investing. Wait around 9-ish to buy stocks, which I followed because it doesn't settle around 9-ish. So even though it's very tempting, like at 8 in the morning when everything's up so high, but then next thing you know, it's 10 o'clock and it's going downward, which is not, it's a roller coaster of emotions.
It is.
I kept in mind of diversifying. I kept in mind about, I would sell stocks with long tails because more likely the next day it'll drop halfway or,
You're talking about point and figure.
Oh yes, point and figure. I also applied when I wasn't too sure which one to buy, which stock to buy, I compared it using the point and figure and the performance charts. I also created my own spreadsheet and I used the formula that you provided in your radio. It was the Google sheet. You have
right.
explanation, so I apply that. I have over 100 stocks that I go through every night just to have at least 10 for the following day that I can just focus on. It's a lot of work, but I can do it now. I know once I go back to the office, it's gonna be, I don't know, we'll see. I was looking out for double breakouts, triple breakouts. What else can I say? The major bullish percent indexes.
Carlos, you have a mujeraza, you know that.
I do. I love her.
So the major bullish percent indexes, that was a game changer. That really enlightened me. I'm like, what? Anyone who invests should know about this because it pretty much tells you the atmosphere of the stock market. I just thought you were giving us the secret of our secrets. So I'm very grateful because not everyone gives you, a lot of YouTubers, for example, they don't give you their secrets or.
Well, the source, I want you to learn to fish. I don't just want to give you the fish. Otherwise, I'm creating a parasite. I don't want that.
LVGO in the radio this morning. LVGO. And I think I have my eye on it. It has a great EPS data, but it has a nice uptrend and it has a pattern. You can tell it has a certain pattern. So I learned by
feeling it.
So
yeah,
everything comes into place and it's beautiful. It's a whole.
It's music. Oh my gosh. Adriana and Carlos, the two of you, I saw an email that Jonathan wrote to you. I think he said you guys are like a powerhouse couple, and you are. There's no stopping you. This is amazing. Thank you for sharing you, and I hope that we do stay in touch because I think that you have so much to offer, and we need more people like all of you to share what you have, and who knows what could open up for you. You never know. You never know who's listening. You never know who's watching.
I just want to add one more thing, and I guess I want to say it out loud. Julie, back in 2008, I quit my job and I was on a search for a new job. But prior to having that job, I had an account on a 401k, and I didn't know what to do with that. So my mom said, you know what? llámale a Julie, a lo mejor ella te puede resolver algo. So I called, and I was the first one that, and I had questions about my 401k. What do I do with that? What is it? You know, so on. And you told me to look into a Roth IRA, which I did, and me regalaste el del Círculo de Excelencia. So you were a godsend, Julie. Like I told you in your email, like
you are fertile ground, and because the seeds get thrown out there, you know, I open my mouth in front of this thing here, and the voice goes out, but not everybody puts it into practice. And that's the difference, is that you put it into action and you made it happen and you used the information, and that's what makes the difference. You will make anything work because anything works when you work it. And you did it.
Thank you again. I did a lot of mistakes throughout my journey.
I do too.
The whitewash. I think
Oh, the wash sale. Yes, I remember. Mm-hmm.
You can only sell a certain amount of times during the week, based on, of course, if you have, depending on your account, if you have 25 grand or more, it's unlimited, and so on. So you learn as you go along, and like they say, you only learn once you te avientas. That's
A panzazos.
Mm-hmm.
That's right. Where do you live?
I live in Hawthorne.
Okay. So you're in the LA area. All right. We have to get together. When I get back to the US, we have to, and this whole nonsense thing, not nonsense, this horrible thing is
Long
over.
Beach.
We have to get together.
You can come to my restaurant.
Oh my God. You have a restaurant?
I work in a restaurant.
You work at, yeah, absolutely.
Make it a table for 122. We'll bring everybody.
Yes, yes. I'll just, I'll reserve the whole restaurant. Will they do that?
Not currently.
No,
Not
not now, no. But,
yeah,
but we'll
of the
see. We have
rules.
to stay in touch because you know what? I would love to party with you guys. Let me just say that. I would
Definitely, you
love
be
to
our
party
guest.
with you guys.
That would be like
Yeah, for sure. Wow. Amazing. Jonathan, I don't know what else to say because I am in total awe.
I'm with you on that one. Adriana, thank you so much for sharing your story, for sharing all of your information that you've
You're
given
beautiful
us.
inside and out, Adriana.
Yes, definitely. And the same goes for you, Carlos. Thank you so much for sharing. It's awesome to get to see that there's never the right or wrong age to get investing. My first actual experience investing was in 8th grade for a stock market competition. I never thought that I would make a career out of it or a job out of it. I just did it because it was a course that I had to take in school. But I found that I loved numbers. I loved formulas, and I loved finding order in the chaos. And the stock market is perfect for that. It's a world of fast-moving people running around trying to throw out offers left and right. But there is harmony in that chaos, and it's just finding that little zone. Some people might find it in day trading. Some people might find it in swing trading. Some people might find it in buying long-term securities or drips. But find your area that you feel comfortable and that you can grow from. Because where you are today is a great starting place, but you can always learn more, and there's always more fun and more money to be earned. So thank you so much, Adriana. Thank you, Carlos. I want to start. There's a couple of questions that I saw in the chat, so I want to take a step back and review those because a lot of them do cover the similar topic. What do these ticker symbols mean? Sometimes stocks will have 2 ticker symbols. What do those actually mean? So there's 2 different ways that stocks will be categorized. There will be voting and non-voting shares. So someone used an example of, I think it was MCK, it was McCormick.
MKC?
MKC, thank you. Yes, so there's MKC and MKCV. So the difference in those is the MKCV refers to voting shares. So those are shares that if you purchase a certain amount of them, will allow you to vote on company decisions. Shareholders, just like if you had a private company, shareholders gain equity of the company, or they get a little piece of that company. It's not just a dollar amount in a portfolio. Oftentimes, you can gain benefits or even the ability to vote on company decisions based on the amount of shares or the type of shares that you own. So in the case of McCormick, the MKCV is going to be the voting shares for that stock. Now, there's another type of difference on some other shares. If people are interested, I can try and find some examples, but there is common shares and then preferred shares. So common shares are what people like you and me typically trade. If you're going to buy a stock, 99.9% of the time, it's going to be a common share. That means that you are buying a little piece of that company, and it's going to have a dollar amount that at a later point you can sell that share for whatever the market value says it's worth. Then there is preferred shares. Preferred shares are slightly different because instead of getting a dividend based on the amount of earnings they had, you are guaranteed a fixed amount of return every year. So it will pay a dividend that is always fixed. So you almost can guarantee it like a paycheck that you get, where if you own a certain amount of the stock, you get a certain amount of money every year. And also, preferred shares have an additional, I wouldn't say a benefit because it's never a good thing, but in the event a company goes belly up and can't pay their bills anymore, they need to pay out their shareholders. So how do they do that? Because they need to start somewhere. They start internally. They pay off all of the shares the company owns. Then, before they move to the common shares that people like you and me may have, they're going to move to the preferred shares. So the preferred shares are going to be the next place the company goes to start paying back money. So if a company doesn't have enough money to pay back everybody that owns shares, the shares that you may have of common stock may be worth zero, and you have a sheet of paper that's not worth anything anymore. But if you have preferred shares, there is a higher likelihood that if the company goes under and needs to pay out on all of their equity, that the preferred shares will always be paid sooner than the common shares. So really all you need to worry about this for the purposes of trading, common stock is what you really will be focusing on. If you want to look at preferred shares, that is a different story entirely. And most of the exposure that you would have to those preferred shares would be through a mutual fund that specializes in trading preferred shares. But really, common shares and either voting or non-voting shares is going to be where most people are going to spend their time. So the other question that I saw, and a great question, is who figures out the S&P 500? What does it mean for the S&P 500? Why are there stocks in the S&P 500 that are under $6, so penny shares? And how do stocks come in and how do stocks leave it? So the S&P 500 is the 500 largest companies within the New York Stock Exchange and the NASDAQ. So it can be from either market. And they need to meet these following criteria. They need to have a market capitalization of over $8.2 billion. They must have at least 50% of all of their shares be common shares that are accessible and tradable. And they need to maintain a price per share of over $1. Besides that, and as all publicly traded companies require, they must file their 10K reports annually. So these are the requirements for a company to be considered for the S&P 500. Now, how do you become one of them? Well, you got to take out the guy above you. You need to make more money than the person in the slot 500. And funny enough, there isn't just 500 shares in the S&P, or 500 different stocks in the S&P 500. There's actually 505 currently. The reason is some companies like Berkshire Hathaway, for example, have BRKA and BRKB shares. So there are 5 companies in total that have those 2 different selections for voting or non-voting shares that will allow you to trade, and there's 505. But most of the time, we're going to see stocks remain in the S&P 500 for a very long time. So for example, some companies such as Honeywell or Abbott Laboratories. Abbott's a company that we've covered. Abbott has been in the S&P 500 since 1964. And funny enough, 1964 is just about the time that the S&P 500 really started to become something that people looked at. So until then, there was always market capitalization, but this was the first time that they put a small group of companies together to represent the overall market's condition. But that doesn't mean that companies can't come into the S&P 500. As in May, we saw 3 companies all enter the S&P 500. Some not for the first time, but we saw these companies re-enter the S&P 500. Those 3 companies were Domino's Pizza on the 12th of May, Dexcom on the 12th of May, and West Pharmaceuticals on the 22nd of May. So companies are always coming in and out of the S&P 500. But remember, all of this counts for the amount of money, the amount of money that is being put in. So if you have more market capitalization, you are going to be worth more, and your dollar amount or your price is going to be worth a lot more than the smallest company in the S&P 500. So again, there are voting shares and non-voting shares, as in the case of McCormick. There's MKCV for the voting and MKC for the non-voting. And then there's other companies that will have preferred and common shares. What happens if a company is delisted from the NASDAQ? So it is a requirement for those shares, or for a stock in the S&P 500 to be in either the NASDAQ or in the New York Stock Exchange, NYSE. So if it falls out of the NASDAQ because it can't file their 10Ks or they don't file their quarterly and yearly earning reports, then it's also going to fall out of the S&P 500 because they're no longer meeting the requirements to be in that market. So,
Man, you had
hopefully
your
I played a little bit
today.
of catch up there. Josefina, you've had your hand up for a long time. I promise I've not missed
Okay, your
you.
cat is going crazy back there, okay?
Yeah, the cat likes her toy.
Hello.
Hello, how are you?
How are you? Julie, you remember me? I called you yesterday on the radio.
Yes, ma'am.
I've been
I sure
calling you
do.
for 20 years. I have a question because I have a problem.
Hopefully I have an answer.
Yesterday, I take away the nata for one, but on the other I had only I have problem because I only have 30%, and I trying to sell it through Fidelity, and I cannot go through. How I do it that part? I want to take away the nata for that one too.
Okay, wait, you're trying to sell, do you know the dollar amount that you want to sell?
Yeah, I buy the
And then you figured out how many shares you need to sell for that?
I only buy the 30%. A fraction.
Okay, so when you are going to sell it, do they allow you to say you want to sell 0.1 share?
No, they don't allow me. I try
You're
by the
kidding.
phone.
So they let you buy a piece of pizza, but they don't let you sell it?
Yes, I trying.
Ay, pero eso no está bien. So what are you supposed to do with that piece of pizza?
Pues no me la puedo comer. I don't know. Maybe I need to call Fidelity.
I think you do because, okay, now they will allow you to sell the whole piece of pizza, right?
It's because it's two different stocks, different companies.
Okay, but that doesn't make sense because you should be able, if you can buy a fractional share, you should be able to sell a fractional share.
Okay. I trying to sell it to get the nata, but I cannot do it.
That's right. That is scandalous. Okay.
Yes,
We need to find out. We need to, because in the meantime, that share is doing whatever it wants to do and you are exposed.
Mhm.
Okay, so please call them like AP, you know.
All right. Thank
I
you.
have never, see, this is so new.
Mhm.
They were the first ones to allow you to do that in a grand scale because the other brokers don't allow you to do that. And the rest of you that don't know what we're talking about when you buy, you usually have to buy 2 shares, 1 share, 10 shares, 100 shares. In the case of Fidelity app, you can buy $20 worth of a company that's worth 100, and you're going to buy a fraction of the share. So instead of buying the whole pizza, you just buy a piece of pizza, a slice of pizza. But now what she's finding out, what Josefina's finding out is that now she wants to sell, you know, take the profits out, but how does she tell them? Oh, I would have, yo hubiera empezado al grito. I would have, yeah, you need to call them.
You my teacher.
You're, no, but you tiene que defenderte como una gata boca arriba because, you know, you want to sell and they won't sell it. And it's like, in the meantime, you're exposed.
Yeah.
Right? So, okay. So please, and we need to share that with us, please.
Okay. Thank you.
Thank
for
you.
All your advices. I've been applying a lot of advices.
That's okay. That's all right. Listen, I learn more from you. Sometimes I learn so much just getting ready to talk to you, okay? Because you put me on the spot. So I have to do it. Thank you.
Thank you.
So there's a question
¿Cómo se
that
vende la nata in Fidelity?
I was
You just
about
tell
to
them you want to
ask.
sell so much. How I do it? I'm sorry, Jonathan, I interrupted you.
I was about to have you answer that question.
No, well, how I sell the nata is I say, okay, I want to take $1,000 out. So I figure when you do it, I put the order and I make it a market order. I do TD Ameritrade. Then it tells me, okay, for 100, I see that it's too much. I don't want to sell that much. So I see in proportion to that, I start playing with it. Okay, is it 50? Is it 40? Sometimes I end up, and I have to be honest with you, there are some numbers that I hate, and I will not share that number of shares because so I have my favorite numbers. I mean, my favorite number is 12. Okay. So whenever I have to like maybe sell 13, I'll only sell 12 because I really like that number. Now, this is like do as I say and not as I do. It doesn't make any sense, but this is just to show you how you can personalize this any way you want to. But I then start lowering the number of shares until I see what the outcome is going to be. If I want to sell 1,000, then I make it get as close to 1,000 without going over as possible. And how I've done it, I did it a lot with DocuSign. I sold that a few times and I took the nata out. Now I have to take more nata because but I didn't want to do it today, but it went up today. So I'm planning to, hopefully Monday it'll be fine and I'll take out some more nata. But I am like Adriana, whenever I see a long tail going up, I start getting nervous. They say, put more money into your winners. That's fine. It works, but not for me. So I start skimming and I feel so good and I sleep so well when I do that. So this is what you have to do, what works for you, and you will find any expert in this is going to tell you the same thing. This is more an art than it is a science. So that's how I do it. I start with the number and I see what that result would be. But this thing for Fidelity has thrown me for a loop because I don't know. We're going to have to figure it out together. I'm going to find out too. But thank you, Josefina. You know, we're all, and look, now it's so easy because you don't have to worry about the commission charge. Before you had to think not only, okay, am I going to get this back, but now I have to subtract the commission or add the commission if you were close to buying the amount of money that you had there available. Now we don't have to worry about that. That's why it also makes so much sense to get the nata out because you don't have to pay commission for selling 5 times the same share, the same stock. Does that make sense? Something, you know what I mean. Jonathan?
Yes. Okay. Veronica
Thank
has a question. So do you not use 10% on all your transactions?
Do I use the 10% trailing stop in all my transactions? No. The way the market has been lately, I started doing my 10% and zoomed me out twice. And I said, okay, come, let's do it. We're going to do it your way. And I changed my tactics. So the 10% is really good as a starting point for you. Look, Eleazar, I know, doesn't do the 10%. Again, the rules are there to give you the basic vanilla ice cream recipe. But then you make it whatever flavor you want. But you need to learn to make vanilla first. So don't say, oh, I'm just not going to apply that this time. I'm going to do this. Well, if you're making money, great. It works for you. But if you're losing money, go back to the basics because you're doing something wrong. Everybody thinks they can do something better than, instead of buying it here when it breaks that last column of X's, I'm going to do it first. Well, good, but you're cutting down the chances of you making money. Maybe it'll work sometimes, maybe not, but you're increasing your chances of making money by following the rules. Although in the class, I don't know how many of you are going to be in those Wednesday classes, but I'm going to show you other entry points that I'm not just breaking the top, the X line. We're going to get. Plus, I can't have Melly make more money in the stocks than I do. So it's going to be funny because her style is different from mine. So it's going to be kind of the dueling banjos. It's going to be a friendly competition between her and me. That's going to be fun.
Awesome. Well, thank you so much for that question and that awesome answer.
Y que no digas eso. By the way, the S&P 500 is a group of 12 people that decide who's going to be on and who's going to be off. Did you know that? 12 people decide who's going to be on.
Those are some 12 powerful people, I'll tell you that.
Yeah.
Modern day Camelot Knights of the Round Table.
Yep.
Eleazar has a question. Hello, Eleazar. How are you?
Yo me presigno antes de que
How
la
you
Sara
doing?
haga una pregunta.
Okay, well, I have a question for Julie. I'm trying
What am I, chopped liver? Okay.
I want to see what her advice is on this question I'm going to ask. Well, you can answer it too, John.
Make it easy. It's Friday.
Yes,
And
it'll be
I have
easy.
a bad hair day.
Okay, I'm trying to decide my strategy moving forward.
Ooh, big words. Okay. I'm ready.
Okay, my strategy before all these classes was, okay, I've been keeping my stocks for the long term. I started testing it because years ago when I started following you, I was doing that and it was too much buying and selling. And back then you had to pay commission. So
Yeah.
and I have a business. My business keeps me busy, so I didn't have the time for that. Today is still the same. My business keeps me busy, so I cannot be trading so actively like you do. But I do have some time. I mean, to check. My strategy was a couple years ago. I started buying the leaders and keeping them, but I was buying a little bit, putting a little bit of money, testing to see how it was going to work. Well, 2 years later, I see that it has worked good. The stocks where I put not 10, but 15% trailing stops, well, at some point they got sold, but eventually they will come back up because they were leaders. Some of them I didn't put trailing stops and I still have them. And today, is showing gains of 150, 200%. But with all this that I've been hearing in these classes, I'm trying to decide moving forward. I see your strategy here that you're taking taking gains. That I want to see if that's something that maybe I will consider doing, but that's what I've been.
But it's not up to you either. It's up to the company. There are some companies that are keepers. You have the Apples, you have the Microsoft, you have those are your long-term leaders. Those are the ones that you don't use the 10%. What I use for that is the line of resistance, the blue line or the red line. I use that. And I showed you guys that one HRH something R that for 10 years didn't give us a sell signal. Well, that was a sell signal, never mind, but it's been above that line. So you can say you draw the line in the sand, but the company itself already comes from birth. It comes from the factory with certain characteristics. There's some girls that you don't take home to mother, okay? Let's put it that way. Some you just want to have a great time and have a great party. And then there's those ladies that are really marriage material. And the same thing happens with the stock. There are some stocks. Let's talk about the DocuSign could end up being something good long term, but let them prove themselves first. But we have the Zoom and we have all of those virus plays that we don't know how they're going to react after this is over. But so those I would play my way. But there are those that are longer. For example, I have Exxon. I'm not selling it. And Exxon has not made me happy lately. I have Johnson & Johnson. I'm not happy about it. Okay, it's gone down. I have Adobe. I'm not selling Adobe.
Yes, well, when I first
Marriage
started,
material.
I have a lot of drips that a portfolio of a lot of drips. I'm not selling any of that. I have mutual funds. I'm not selling any of that. But this stocks that you're buying and selling, at least this was my idea. When you go to your website, you have a very nice intro video there that says if you had invested in Home Depot back in 80, you'll have $2 million. Or 2 years ago in Priceline. Well, those are the type of stocks that I would like to find. Like,
wouldn't we all, honey?
You're telling me Apple and Facebook. Those are
I'll tell you what, if you figure that out, Eleazar, I will host the next class. You can do it, okay?
Yeah, but what my point is this, that you're saying the long term will be Apple, Facebook, but why don't, Priceline was not, it was a small stock like 10 years ago, 15 years ago, and it grew to a point where you would have made a lot of money.
Let me tell you how you do it. There is a recipe for each kind of stock. The recipe for the long-term leaders it's not only that they may not have stellar earnings per share growth, but they have a stable earnings per share growth. So that from quarter to quarter, year to year, they're like, like the turtle that goes little by little, and they just keep chugging along. And when the market is not happy, those are the ones that go down the least. They're not just fair weather friends. So those have to earn their medal before you consider them to be long-term holders. This is why today during the show, I gave one company that Adriana already jumped the gun and studied it.
I bought it a couple of weeks ago.
But that one has the potential, and we're going to talk about that on Monday on the show, because that has a potential for being a long-term leader that you treat differently.
Well, when you see the performance chart, I think the other day you did it on stock charts where you put Apple versus Domino's Pizza.
Yes.
Well, Apple is already a large company that is not going to grow as a smaller
rapidly, right?
Right, where you can make a lot more money.
Well, it's like that's a 15, 16-year-old that's going to have growth spurts, where the other one is already, a 30-year-old, and you're not going to grow anymore or very little. In fact, I'm getting smaller now. So that happens. But the thing that you cannot do, please, is just to buy it and to put it away.
No, I'm not watching.
Those days are over. Even the leaders, 95% of them go down. Okay, look at Pan Am, look at Xerox. They don't do it. Don't do it. We're not in those days anymore. You have to have some lines in the sand.
Yeah, and that's why at the beginning when you started showing the point and figure that uptrend line, well, at least that
Yeah.
helps.
That rang a bell with you.
Yes.
Yeah.
Because again, I don't have a lot of time to be so active because
You don't need that much time, by the way. I don't spend that much time. I have, first of all, I put my alerts on. I put a bunch of alerts to the downside today, a lot of them. And I trade at the beginning of the day. And then when I finish the radio show, I take a look at it. But remember, I mean, I'm busy all the time and I can't be saying, excuse me, you guys, I need to check on my stock here. I can't do that. So I do it in the morning during the time that I can do it, but I'm consistent that I always do it at the same time. See, for Adriana, maybe it's 9 o'clock, maybe it's 10 o'clock, maybe whatever, but just that time, if you just look at it then, and then you say, okay, if it does this, I want to do this, so I want an alert, or you put in an order, or you say, I'm just going to do it now and not take a chance. See what I mean? You can plan ahead.
I think I need to work on that of
manage your time so that you don't feel like you can have a life. You need to have a life. You can't just.
I guess for everybody,
sell medication for that.
For
I take it.
When I start looking at all these graphs, I mean, it's kind of like addicting that you start looking at one and then another one, and I mean. And
it's never enough, and you have to be able to say when it's good enough. It's never going to be perfect. It's going to be good enough. And that has to suffice. Otherwise, you're going to drive yourself crazy. Okay. I have a really good doctor. Okay. All right.
Well, thank you for the advice.
Okay, you're welcome. This is from a friend. Not even, I'm just talking to you as a friend, do it as an older friend that has lived through that. You can get so absorbed by this that you lose perspective and balance in your life, and you can't allow anything.
That's what I don't want
to do that to you. You're going to have a very unhappy partner and family, and that's not, not good. Sometimes I sell everything. When I go on vacation, I sell everything before, and I don't even look at it while I'm gone. I don't want it. It suits my style.
Yeah, I think I'm going to adjust the strategy moving forward.
Yeah, good idea.
Thank you. Thank you, Julie.
Okay, you're welcome. How many hours does she spend trading? Adriana, how many hours do you spend trading? Kiera, can you unmute Adriana, please? Thank you. Not yet.
How many hours?
Okay. How many hours a day would you say you spend on this?
Maybe an hour and so.
A day?
Yes, but I look at it frequently, which I think I should stop because it does bring up my anxiety and it's not healthy, and your mind is just focusing on the stock market. It's not healthy.
No, but this is new for you, and you found a new toy. Like a little kid that just found a new toy and wants to play with the toy, and then later you find your balance. But you need to do that, yeah.
Yes, definitely. Have your alerts. That helps a lot. Definitely.
To me, I put an alert here, and it's like putting a pit bull in front of my door. I go to sleep knowing that I'm protected.
Yeah.
It really, psychologically, it really helps. And it helps me more than the 10%, because the 10% bothers me. It's happened to me so many times that I get pushed out of the stock and then it goes up. I jump the gun. And now if I'm going to have a 10%, I put 8% for my alert. I want to know first. It's like, you have to get up at 5 o'clock in the morning and you're waking up at 1 and at 2 and at 3 and at 4, because you don't want that thing to go shrieking at 5 o'clock in the morning and you wake up before. I want to wake up before. I don't want it to just catch me by surprise. But that's my craziness. Too much information. Okay.
Awesome. So there's 2 questions that I want to go through and answer really quickly.
Oh, look at this. Somebody says I work at a hospital. That's so funny.
I'm going to answer the first one because it is it takes us to FinViz, and then we'll go over to stock charts, and then I can answer the second question while we're over at stock charts. So somebody asked, there is a stock, Mercado Libre, and they were asking
Meli.
why there is no P&E ratio for it, and then after the P&E ratio, what I think of it. So I'm going to share my screen so everyone can see the stock we're talking about. The ticker symbol is MELI. Now, the first thing that I noticed looking at this is this giant jump that happened in May. And that, if we look down here, I wonder why the price went up so much. It was due to their Q2 earnings report. So that is, sorry, Q1 earnings report, my apologies. So that is very interesting to see. And something else is that there is no P&E ratio. Now this could be one of two things. This could first be no P&E ratio because we don't have 12 months of information. We have our P&E TTM, which is what this is, or trailing 12 months, takes the price of the stock and divides it by the amount of earnings that that company has had in the last 12 months. So because we're in June right now, it would be looking at the earnings that the company has had between June 2020 and June 2019. So we do have a forward P&E, but that's a lot less helpful when it comes to using P&E to make an investment decision. To me,
Don't lose sleep
not
over
seeing
P&E.
the P&E, yeah, it's not something worth losing sleep
No.
over. It's a value assessment. It's how overvalued or undervalued the share is. And really what you're looking to see there is how it compares to the rest of its sector so that you can understand if the price is, if it is a very well-priced stock or if you're paying extra. And if you're paying extra, you want to make sure you're getting that extra value. So with this share, I would say that I can't really make too much of an assessment or a judgment of it because of this large jump and because it's due to their Q1 earnings report. It's not due to increased performance or a new product, for example, that caused this massive jump. So it could easily have gone the other way if they had a bad earnings report.
But it's
Something
a virus
interesting
play.
something interesting is that when you were talking before about various stocks, there is a phrase FOMO. I'm sure kids would be very familiar with it, but for the adults as well, FOMO is an acronym for fear of missing out. It is the idea that because I am indoors working right now, there may be a party going on down the street, and I want to be at that party, but I also fear missing out on it. So FOMO is a real fear in the market because it's very easy to make an investment. Who is doing this?
Somebody's being bad.
There is a big difference between when you buy a stock, you say, oh, I made 5% return, but hey, look, this stock had a 30% return. It's important to keep in mind that when you're looking back in time, hindsight is always 20/20. It is very easy to say this stock made 30% while I only made 5%. But when you bought that stock, you didn't know that this other share was going to go up 30%. You shouldn't be worried about...
Call Adriana, she knows.
Yeah, you shouldn't be worried about making all of these crazy judgment calls because when it comes down to it, make the investments that you do meaningful. You don't need to trade more, you don't need to trade less, but when you do trade, make them be meaningful. So coming back to this, it was very easy to see if I had bought it in May, I would have done really well. But that's not to say that there was a buy signal around that same time. So this was in early May. Let's take a look at the point and figure chart for it.
Oh, thank you. I was just going to go do that.
So when we go over to the point and figure chart, we see that in the beginning of May, we had the price down here and our buy price was at $610. So if we look at our price, we did not really break $610 until we already were up at 730. So it really goes to show that that we may have missed the signal entirely because it was not this gradual process of the price going up. It was one day the price jumped $150. So that to me means I missed the bus. But what has it done since? It's had this big trend of going up and up and up. However, right now, we are on a buy signal because we see our most recent point and figure was we have our green line right here, and we crossed it, so we are on a buy signal. But personally, I would wait. If I was looking at this to invest in, I would wait and see, because we see a triangle forming here. I would want to wait and see what way this triangle goes, because it very easily could continue going up because the company is doing very well, or it might go down because investors realize that they bought it at the top and that it kind of ran out of steam and it doesn't have much momentum left, and then it has a chance of going back down. So I really would be looking to see what this triangle ends up doing before I made any decisions on it. Mom, do you have anything else to add for this share?
No, for right now, the buy price is 1,000. If it makes it to 1,000, perfect. That's the right time to get in. But if it starts making the triangle, I would wait then until that triangle decides if it's going to be a positive or a negative. And usually you go back and you see what it's done in the past. And there are a lot of companies making a triangle right now, a lot. So it's really interesting to learn that. And by the way, once it starts taking off, that's a good time to get in when it breaks the triangle going up. That is a really good, strong buy signal.
Exactly.
It's a very
There's
healthy
another
pattern.
question that Javier had regarding fundamentals. If we want to add sales quarter over quarter on FinViz Screener, what percentage is good? Sales is a very slippery slope because there is a big difference between sales and revenue. There are companies that have massive amount of sales but still aren't turning a profit because they are either still, their expenses are too high, or they're paying back loans or debt that they owe to banks or other investors, or they're also investing more money into research and development. So some companies may have a very high sales but still be negative in terms of revenue.
But you want the
that's
sales
not
to go up.
right.
You want the sales to increase. And it's not, to say 25%, it's more what relationship is there. Are the sales increasing? Yes or no? It's a yes or no question. And what is the relationship between the sales and the EPS? There are so many numbers you can go crazy, you guys. Don't go crazy. Please, keep it simple. The market is a leading indicator. That means you look at what the market is doing, you look at that bullish percent where it is, it's telling you where everybody else is going to follow. You can go crazy with the rest of the stuff. But concentrate, don't make life too difficult for you. Just worry about what the market is doing, what the price is doing, and the moment to buy and the moment to sell. In fact, sometimes, when we start the class, Melly doesn't do fundamental. She bases her decisions on technical analysis only. So don't overthink it.
There's a great stock I always love using as an example because it's a company that, like my mom said, had increasing sales, but for the first 5 years that they were a tradable stock, they were negative. That is Tesla. Tesla did not start turning a profit until mid to late 2018 because all of the money they were creating and all of the capital they were raising was being put into research and development for future cars or into factories that can lower their costs long term, but in the short term cause them to be losing money. So that's a great example of where we see that there's a difference between income, profits, and sales. So that is where you're going to be trying to look a little bit more at long-term growth as opposed to short-term performance. There's a really good question that I got asked. How much money is healthy to invest in the market today? Invest enough where you feel involved, but don't invest more than you're willing to lose, is the way I would say it. Mom, do you have anything you want to add to that?
I went in heavy, let me tell you. When I saw the market doing what it was doing, I listened to the market because it's always right. When I saw that the traditional, look, I wrote a book about this, okay? I put my time in for this, that you do the price and you look at the volume. Well, the prices were taking off and the volume was not there. But the point and figure was telling me it's time to jump. Well, Julietica jumped because I waited to jump and missed some opportunities. And I said, I'm going for it. So I started out big. And then I started taking my nata out and out and out and out and out. Now, you talk to Mario, he's going to tell you dollar cost average. You dollar cost average, you buy, and then you do a little. I'd rather go the other way. If I'm going to, when you buy right, that stock is going to take off. And it's going to take off at the beginning. And then as it goes back, que me quiten lo bailao. I already have my little earnings and I start scaling down. I think, and I have the money inside an IRA, which is also almost like a false sense of security because you think, I'm not going to touch that money. You know, it's not really my money. Right. So I'm a little gutsier about that money. But that's me. I take advantage when I saw the bullish percent. Go by that. I'm telling you, when that bullish percent was under 30, it hit like almost 0. And it started going up. I said, I'm going for it. That's it. This is, my bell has rung. It's now or never. And I went for it.
Meanwhile, I'm the kind of investor that I hate risk. I hate risk so much. I am my father's son and then some. So I always like to be able to invest where I invest more aggressively in strong markets or in markets that are more favorable. But in higher risk markets, I tend to like to pull back a little bit, not go for as risky of investments, and maybe start looking towards a little bit more mid to long-term stocks as opposed to stocks that I may be buying and trading more frequently.
Except that the money's made at the beginning of a bull market. And when everybody catches on and sees that the market is doing well, guess what? You've made your money already.
Uh-oh,
It's
my
too
dad's
late.
here. Now I'm in trouble. Yeah, what she just said is very true, because if you get in early, there's a lot of room for the boat to get risen up. So a great way to do that is BPI. BPI is going to oftentimes be one of the first things to turn. And remember that 80% of a stock's price movement is due to its sector. So you don't even need to start digging through and going through all of these smaller stocks, because if you track and you understand when the market's starting to turn for the better, looking even at sectors would give you a really good starting point for, I want to get involved in the market, but I don't want the risk of an individual stock just in case the market turns back again. So I usually like to go in that case for sectors. If I'm investing a little bit more aggressively, then I'll look into those sectors and find the leading stocks and invest in those. Now, there was one last question that I wanted to get to. Eleazar, I promise I'll get to your question, but while I'm here on this chart, I want to finish this. Somebody asked me, can you expand the chart that you currently have? So this is a great example. For Mercado Libre, we see all of this price movement is all within 2020. So stock charts will always show you a certain number of boxes. That certain number of boxes can be up to, but never goes past a certain amount. Now, if you wanted to see more, you can't choose your starting date, but the closest we can get is here. We have not what I wanted. Here we have duration. And under duration, from chart attributes, you have the ability to choose fill the chart. And this will give us a more broad look where now we're now comparing a year and a half as opposed to just from February to January, or sorry, February to now. So it will be able to give you a larger chart, but usually because you're mostly looking at the most recent direction and the most recent signal, you're not really as concerned about what happened 2-3 years ago, but looking back in time to see how the stock has performed, for example, how does it perform when it reaches a double top breakout? A lot of stocks will continue their momentum, while others may have a tendency to correct back down first before finally taking off. So it
Something
can
just
be
occurred
good
to
to
me.
find trends.
That is going to help Eliasar. And don't be afraid to play with the scale of the price. There's nothing sacred about the scale on the right side. This one goes by fives. But let's say that you're a long-term holder, or you want to see how it does in long-term. Make it bigger. Make it a 20. Change this one to a 20. Jonathan? Yeah?
I can't change it.
Change the box at the bottom.
The box size?
Yeah, just change, instead of method, user defined. And then make it, there you go. Now show us. Okay, now you see, or even make it more, make it 50. So you're compressing it, which means that there has to be a bigger change for there to be a signal. See what I mean? So you are not then subject to getting shaken off, sacudido, of the stock. That's what a shakeout is when it gets rid of the losers or gets rid of the people that should have never been there, and then it continues its trend. See, here, look at it like at different scales, so you see, you get rid of the noise. Does that make sense to you?
So that does help to be able to provide more information on the same chart.
Exactly, and with less noise in between, with less craziness in between. So if you're a longer term investor, you might want to scale it bigger so that you say, okay, I'm not going to overreact. Yes, it's telling me it's time to, maybe I should sell, but I'm going to hold on to it. Or I'm going to wait until it hits this level before I buy it.
Awesome. Well, thank you for that. Eleazar has a question. Hello, Eleazar.
Yes. Sorry, I forgot to ask another question, Julie. I think somebody asked you this a while back, but how many stocks should you invest in at one time?
That's a really good question. The
I
most
think,
that I invest, go ahead.
I think back then your answer was as many as you can be watching.
Yes.
I was reading something, I think Bill O'Neill on his Can Slim strategy.
I learned to invest from him.
But I believe he says that if you have, like, for example, $100,000, you should invest in no more than 4 to 5 stocks.
Mm-hmm.
What's your opinion on that?
I think he's the master, and I tip my hat to him. However, that's not, that's for rule of thumb again. But if you can keep track, remember also when we have today all of the alerts and everything available to us that we didn't have way back then. And the most I've had this time is 13. I had 13 stocks.
So that's
not 12,
kind of like outdated, basically, what you're saying. That
it's not outdated. It makes sense. But if you can handle more, look, when things started going really well here around the 15th of April, around there,
Mhm.
It was like a piñata. It was like the candy was coming down the piñata and you couldn't grab them fast enough. You tell me you have to choose the best 5. Every time I would buy one, ding, another one would give me the buy signal. I would buy that one too. And ding, another one gave me the buy signal. And I thought, there is a party going on and I am in it.
But I know that happened recently, but that can happen in other markets too. I mean, I remember a few years ago when I was doing it, and
Eleazar, you really like to make life difficult for yourself. You know that?
so
Snap out of it.
the
Don't worry
question
about
is, should you add more money? I'm a big believer in diversification rather than putting all your eggs in one basket.
Wait a minute. Diversification is one thing. Shooting in the dark, hoping that you're going to hit something is something else. And a lot of brokers tell you diversify, but what they mean is put a little bit here, put a little bit here, put a little bit here. Well, why should you put money in losers? Concentrate on the winners.
I'm not talking about losers, but instead of like saying putting everything in one sector, like
I don't.
multiple sectors, because maybe one sector is good now, the next month, I mean, it might be a different sector. So that way it's diversified. But that's more for a long-term strategy. I know that for the strategy that you have, well, that doesn't make sense. I mean,
It doesn't for my strategy. And when I get tired of doing it, I just stop altogether. That works for me. Again, make it work for you.
Okay. Well, finally, the only thing I want to say, finally, thank you for answering all my questions throughout all these classes.
I love them.
I hope it has helped others. I know that sometimes people don't like to ask questions. They're kind of like shy. I've learned over the years to
not be shy.
To ask. I mean, if you want to know more, you want to get more knowledge, you have to ask. And I hope my questions have helped other people.
I'm sure they have. They kept me on my toes, let me tell you, Okay, thank you.
Thank you.
All right.
There's one quick question that somebody asked in chat. I'm confused. What is a stock? Is that the company that we're investing in, like Coca-Cola, within Coca-Cola purchased shares? So think about it like this. A company, when they want to go public, they will take their company and think of it like a big pie. They will cut up that pie into a certain amount of slices. A lot of those slices they'll keep for themselves because they want to make sure that they have their slices and that they can have some more slices to give out if they want to later. But they're also going to take a lot of those slices and put them for sale. So people like you and me can go and buy some slices of that pie. So we can buy a slice of Coca-Cola, or we can buy a slice of Tesla. And by buying a slice or a stock or share, you are buying a small part of that company. So the price that you pay for that share is the price that the market has deemed that company to be worth. So if you took all of the companies in the market, all of the stocks that a company has, and multiplied it by the price, that should be the value of that company. So a share is nothing more than a piece of that company that you can buy and sell. But instead of having a pie with maybe only 8 slices, we have a really big pie with millions or even billions, in the cases of some companies, billions of those slices that can be given out to different people. And like I said before, not all pieces of pie are made equal. There are some that you'll get a little bit more filling than others. So some of those shares will give you extra perks. For example, if you own 100 shares of Disney, you get 1 free night at a Disney location every year. Or if you own Berkshire Hathaway A share, you gain access to Warren Buffett's
annual meeting.
Yeah, annual meeting and quarterly meetings, which was actually really cool because this was the first year that he's done it on webinar for everyone to view. So that was really, really cool. But typically, companies will give perks to those that buy shares of their company. So it's very cool that we get to be a part of it and we get to own parts of companies. For example, two shares I own is I own a share of Tesla, which is right here. And then I own a share of Disney, which is in the other room. Disney, I've held it not because it's always been the best stock, but because I loved Pixar. I loved Pixar, and those movies had a huge influence on me growing up. So my mom bought me a share of Pixar as my very first stock. I've kept that stock till today. And after numerous stock splits, after Disney acquired Pixar and all of my shares of Pixar became Disney, now I think I have something like 5 shares of Pixar, which isn't worth anything in real money, but the shares of Disney definitely are. So.
Oh, they are, because they will translate them into Disney.
Mm-hmm.
Yeah, you haven't lost the money.
If I hold Amazon for a year. It's a private message.
Okay, Jorge has a question.
Jorge's
Jorge,
driving.
hello?
He better pay attention.
Julie, can you hear me?
Yes, I can.
Hi, Jonathan. Hi, Tiara.
Hi, Jorge.
One thing, Jonathan, I see your guitar back there. You play guitar, right?
Oh,
do.
yeah.
Yep.
I got one too.
Nice. Acoustic, electric, classical.
Acoustic.
Nice. I think my
Okay.
favorite, and sadly I actually have a broken string on it right now, is
Oh, wow.
this classical guitar right here. I absolutely love playing bossa nova and classical Spanish music. So I love having the big nylon strings so I can actually play it properly. So.
And
like that.
Romanza is my favorite one that he plays.
I like nylon strings, but I also play the drums. I got a drum set, electric and acoustic.
My feet are so useless. It's absolutely laughable. I can't dance. I have horrible balance, and my feet have no idea. So, like, hands, I can do that, no problem. My feet have no rhythm. My
That
feet
is
miss
not
the
true.
message of you're Cuban. Kira has tried to teach me. I went to some ballroom classes with her, and I'm unteachable. My feet just don't know how to move properly. They never have.
You're too tall. By the
I'm
time
too
it gets
tall,
down
exactly.
there from the brain, it's too far.
There was somebody that asked.
I question for Julie.
Oh, I'm
Wait,
so
he
sorry.
has a question.
Yeah, I'm so sorry.
Julie, I want to say, I've learned a lot from you. First of all, I learned a lot from you guys, all of you. I started kind of late on these classes. I didn't enter the contest because, I'm always working. I work a lot of hours, long days, and I always threw in like 1 or 2 hours for studying. And I carry my books and carry everything with me. When I get a chance, I read them. But yeah, I've learned a lot from you guys, and I want to thank you, Julie. You really changed my life a lot.
Oh my God.
Another thing, you said
That's heavy.
earlier, you said earlier that you don't marry stocks anymore. Not nowadays. That if everything's changed. How about drips? Do we marry drips, or do we put like a 20% stop or trailing stop on it, or what do you think on that?
Okay. Normal people buy drips and just hold on to them forever. I like to buy the drips. Well, I bought Exxon because I'm willing to buy a drip with a little turbo behind it. So I like to go, I'm holding it. I didn't sell Exxon. I didn't sell Johnson & Johnson's. So drips, you hold on to it. But I find that I don't enjoy drips as much as I enjoy stocks because it suits my style to buy and sell stocks better. I'm a wild old lady, okay?
Okay,
And-
I like drips. I mean, same thing. I'm gonna keep my drips, but I really wanna buy and sell stock. That's my adrenaline.
Then that's what you do, honey. Then that's what you do. I'm giving you permission to do what
Okay,
you want
and,
to do.
One thing, do you use Thinkorswim at all, or you just use TD Ameritrade?
I use TD Ameritrade. I do have Thinkorswim, and I'm trying to get used to it. And for this weekend, I gave myself homework that I want to put a whole list of a watch list on Thinkorswim and put alerts in there. But now I'm really confused because I started with Stocks Tracker, and then I moved to Webull. So now I have to update two besides my my TD Ameritrade. So now to get into a third one, you know, I'm not very organized. So when I start one thing, I don't want to let go of the old one. So I'm still trying to decide which one I'm going to have. But I know that Thinkorswim is excellent, especially people that use candles. They really like Thinkorswim.
I download Thinkorswim. I've been on it, you know, and going through it because I know Melly uses Thinkorswim, so I want to get used for the class. I sign in for the class, and so I want to be updated a little bit.
You're gonna see stock. What is it called? What do I use, gentlemen? What do I use?
Stock track.
No. For the stocks, you're gonna see the point and figure from me. You're not gonna see candles, but you're gonna see candles from her.
Okay.
Which is really good to compare and to see, and we're gonna have some disagreements.
Okay. Do you buy anything on Thinkorswim? Any stocks on Thinkorswim?
No, I use TD Ameritrade, and that's it. But that doesn't mean that's what you use. You know, I keep my life manageable for me.
Yeah, no,
but
I like TD Ameritrade, but I download Thinkorswim just because, you know, I wanna see the little bit faster move. You know,
You do it. You do it. You go. You go. You know, I don't want to hold you back. I want to tell you this is what I do, honey, but I brought the baton to here. You take it and you run with it.
Okay, when I first started these classes, like somebody else said, I didn't even knew that a company had a symbol.
Yeah.
That's how much I knew, okay? And now I study a lot, and you know, I got a lot of information.
You're committed. That's it. Te picó el mosquito. Más nunca vuelves a ser igual. You know, you took the toothpaste out of the tube and you can't get it back in now. Oh, well.
Thank you, Julie. Thank you for everything.
Thank you, mi amor. Please drive safely.
And
okay.
Hopefully one day I'll see you in LA. I don't know.
Definitely.
Somewhere you know, you're at a restaurant or something. We meet over there or something.
Are you flirting with me?
No.
I'm kidding, Jorge. I'm kidding. I'm just kidding.
I mean, like,
I'm kidding, please. Come on.
As a group, you know that.
Oh, yeah, no, we definitely have to have a date. Yeah.
Yes, okay. We'll keep in touch.
Yes, sir.
Classes. I'm waiting for those classes.
Okay, good.
Okay.
So I think that about wraps up how much time we have for today. There's just actually there are two things I wanted to quickly say. Three things. Math is hard. One, I misspoke before. Disney discontinued their shareholder benefits. So Disney no longer has benefits for people that own shares. So I earlier said that they do offer benefits if you own 100 shares or more. That is no longer the case. So if you own a share of Disney, the only perk you get is you get dividends. And then somebody asked,
you get a bar of gum, a stick of gum, if you
for
own
Walt
Wrigley's.
Disney in specific, there's no shareholder benefits. The other thing I was going to say is that somebody was saying Disney didn't pay dividends. So it is important to note that Disney is paying semi-annual dividends. So you will not receive Q1 dividends. You will receive your Q1 and Q2 dividends later on in early Q3. So they haven't announced their release date, but it's typically around the 5th to 6th of July. So be on the lookout for your dividend payment coming in soon for that. Now, the last thing that I wanted to mention is that, for some shameless self-promotion here, our product Sectors Made Simple will be going live on Monday. We are very excited to be able to finally share something that we've shared with you guys only in passing, give you guys access to it, let you in, and much like we've done for these classes, we will not just be opening up this tool and letting you guys loose. We will be, well, first off, you guys can go loose if you want, but we will have educational classes to continue going through point and figure, explaining how point and figure can be used for these charts, how we use point and figure to make the matrix, and then how you can use the matrix to make your trading easier. So if you guys are very interested in that, stay tuned for the radio show on Monday at 10 a.m. Pacific, 1 p.m. Eastern. And then right after that, we are going to be doing a webinar in which we will announce the official opening of Sectors Made Simple. So you can go in and hopefully be one of the first 50 people. We are only opening it up to 50 people. So if you aren't able to be one of those 50, don't worry. I promise we'll be opening it up more. But our first round is only going to be made available to the first 50 people to sign up. So if this is something interesting to you, I encourage you guys to stay tuned for Monday, to make an account on our website. Even if you can't get in, we will still have free articles that you will be able to view without purchasing a subscription. So when it comes time for the next round, you know what you're getting into and you know how to capitalize on it the minute you can buy it. So,
And by then, we'll know what we're doing, okay? No.
yeah, we'll know what we're doing by then. So
And also, I'm just kidding.
I just
and
want
also
to
remember that we have Carlos in our class on Monday. Carlos is going to be with us. And boy, we're going to make him open his kimono and just sing like a bird. That didn't come out right. Okay.
So it will be a very, very eventful Monday. You will be hearing lots from my mom, you'll be hearing lots from me, and you'll be hearing lots from Carlos. But until then, thank you all so much for being a part of these classes, for being involved, for asking questions, or being here to write down notes. Everybody has made a significant contribution to this class, and
Yes. And
it's
Kevin,
been
I
such an
love
honor to
watching
be
your
here
hair.
with you all. So thank you all so much. It's been amazing, and we will see you for graduation on Monday.
Oh.
And also a special thank you to, I don't believe Maida is here. If she is, I want to say a special thank you to Berta Velita, Maida Gonzalez, and to Veronica Guevara. They have been very involved in helping to make Sectors Made Simple happen, being our test dummies for how the matrix can be used, and have really shown us the real value of the tool. I don't think when any of us got started, we could imagine what the tool would become. And it is thanks to these powerful ladies that the tool has become what it is today. So thank you so much to the three of you. If you're here or if you're watching later.
No, we have to bring you bring the
all.
liquor, okay? No, just kidding.
So thank you guys all so much for everything.
Not
and
known for politically correct statements. Okay.
You will hear plenty
right,
from us on Monday. You think you're rid of us? You think graduation is going to be the last you hear? This is the start. So thank you all, and we'll see you on Monday. Have a great weekend, everyone.
Bye.
Bye.